Hello, Warriors. New month. Let's stay in tune in June. Give me a Y if you want to do that. Stay in tune. We'll have some ideas that won't be flat or sharp. Well, maybe a few of them. Hello, AJ. How are you? Bran, Glenn, James, AJ. Hi, K-Man, Marcus, Sinatra, Blake, Ryan. So we have a full team here. George. Okay, everyone's going to stay in tune. Hi, Patrick, George. Feels great. Okay, we'll see what we can do about that too. Andrew. Okay, everyone. Okay, so why don't we start with this? So we were talking about last week how when the dollar was pressing the lows, US dollar MEX was not. So it looks like they smelled this election, what the outcome was going to be. And, this may have been an omen for it, what you have back here on this spike. So I think the trend's changed. I wouldn't chase it, but I think the trend has changed in Mexico. So it's been a very long term bear market. And, we diverged down here. And, why is it 19 possible? That was a big breakdown. That's the way MEX looks to me. All the news that we have this week, the dollar, just one update, dollar attempted a breakdown Friday, could not complete it. It's just a poke underneath. So, if you want to, I'm bullish a dollar. Okay, so here's a decision you make if you're short the dollar right now, because of some news that, could move the dollar, which I think is probable. I think we could make another run at these highs, 1, 2, 3, maybe up to 5.5. So, if you're short from, the 105 range, your choice is to get flat and sell a breakdown. Or what I'm looking to do this week is to buy into any dollar weakness. I have some areas in mind, down around 107.60. I'll attempt longs in euro, risking 100 pips. In cable, down around 126.20 or so, this prior high. I would attempt lows, a buying opportunity here. The guys called this a head and shoulders. It could still manifest even though we're up a little bit here today. In Aussie, I'd be looking for about 65.30 or so if we get a pullback into this range. And the yen, I thought we were going to have some follow through to last week's rally. We still can with NFP Friday. And we'll see what happens. Maybe we still will get that rally back towards above 158. And so why don't I start now that everyone knows what I'm thinking for the week, and it's basically fade dollar strength. Let's see what Ryan thinks about all of that. Ryan, kind of in the middle, morning buddy, in the middle of this range that we've been in since, mid-month in May. Do you have a bias?
No, I don't. I'm pretty neutral. My bias for trading is just to trade the edges, go with the range. I mean, if you pop it onto something like a daily, so you can see on that chart we've got we've had a bouncer for 106, so that's looking fairly bullish. But if you go onto something like a daily, you can just see from that high at 111 we've been in a bit of a downtrend. It's quite a flat downtrend. And I think with everything that goes on, I think your 109 levels are key level this week. If we can't break that through anything, I think we're headed for a bit more downside. But I can't see that going too far unless we get some real bumper data from the US. But that 109 might be in trouble if the data from the US is weak. You
Yeah.
know, we could be sailing through there up towards 110. You know, we've got a lot of jobs data this week, so it's going to be a
Okay.
big one.
All right. Besides NFP and central bank action, what's the big news event the news that you're talking about?
We've got the ISMs. We've got one today, then one Wednesday, I think. We got the next one, the services one, which will be the big one. So
Okay.
we'll keep an eye on that. But for dollar yen, I think you got to keep an eye on Wednesday because we get the first wages and earnings data for April. So we could start getting a bit of an idea of all those wage hikes, how that's playing out in the broader economy or the broader jobs market, labour market. And I think if it shows good strength in those wages, then we could see the yen going a bit bid. But if it's a bit weak, we could see the opposite. And, dollar yen could be set for another run higher.
Okay. Bank of Canada meeting today.
Wednesday.
So yeah, I meant this week. So basically, look at all this. You have a year and a half of distribution. All right. I mean, if we break out over 138, it's a different story because, then maybe we're going to attack these levels up here. We have two drives, but I'm not going to pay attention to that. We have two and we could have a three. I'm paying attention to we haven't gone anywhere in quite some time. Blake has this as a triangle. I'm more looking at it as a descending triangle within the distribution, and 136 closes under 136 is a signal. So, was this all the rip it has in it? I don't know, but
You know what,
Go ahead.
Dale, and good morning.
Yeah,
I
morning.
actually took the triangle pattern off because
Oh,
of
did
the
you?
way, yeah, just the way it responded overnight to the 136 level again. It's kind of like, okay, well, it's obviously ignoring that trend line. So it's like
Oh,
now,
okay.
yeah, because it's ignoring it and it's ignored it like literally for the last few days. I'm like, well, no one's paying attention to it. Market's not paying attention to it. So I removed it. So
Okay. All right.
yeah.
So anyway, I think this is a dominant formation, just a straight support line left. I could keep going left and you'll see how 136, and everyone knows
Huge.
how 136 is big because, we had this, almost got there and had this. So 136, can take you down here. I mean, if I really want to be a, big Canada bear, I would say, 136 is a signal that could lead to test of major support around this 132 level. And then if you ever take that out, you're talking 125, 124. So, I think that this is a key week in the currencies. Metals, I don't think they're ready yet. Just talking 22 and a half. Gold and silver's a little weaker than gold right now. Silver has good support at 29 here on moving averages, and that would be maybe A, B, C. So 29 is, if you want to take a stab at silver, that's going to be an area. That's about it. So why don't I go to K-Man? Your expectations. Good morning, Kay. Your expectations for both ECB and BOC?
I think there is a possibility that Bank of Canada goes, but then the theme for me will be for those who cut, like the ECB, Bank of Canada, the new word is going to be cautious, and they are not going to necessarily signal a rate cut cycle to start in all earnest. And that's about how I look at those two decisions this week for the ECB, and because the ECB we've had those sticky numbers last week, and that is probably going to keep them on the cautious side to signal any further action, especially for the July meeting, and that's what the market is going to be fishing for any hints on those. And I reckon there is a fair chance Bank of Canada moves. May have an impact on the Canadian dollar, but I would say that, and actually, McClem and Rogers, they diverge a little bit on their opinion. So I also think that there is is going to be cautious. So take away or take this into account. I reckon the US data could be the more important ones now that we have a bit more clarity on what's happening in Mexico, what's happening. Well, not really yet in South Africa, not really completely, although we know a fair part of it. But yeah, I think the dollar data are going to be important. And as Ryan also said, those wage data in Japan, because the whole of Japan has hung so much importance to it that we have to see what those wage data are going to be out of Japan, and that is probably going to be a driver for the Japanese yen as well. Now that we've seen today, also one of the reasons why I think Mexican peso got such a drilling this morning. So there's two reasons. There's one, because there is a fair chance that Scheinbaum will have also the absolute majority in Congress. That was an uncertainty. And then I think there's a lot of carry trades being unwound from the Asian session into the European session this morning.
Is it also a vote of no confidence by Forex traders on the new administration?
Well, it's not a vote of no confidence. It's a vote of, how shall I say, worried about what's going. Well, yeah, you can call it a vote of no confidence. It's not a vote of no confidence for actually the government as such, but it's a vote of no confidence in that sense that investors, foreign investors, may not have such a good life anymore, because they. AMLO, I mean the Labrador, not having the full power in Congress has held back on some reforms, which would be not always very pleasant for foreign investors. And now they can actually push forward with those, and also probably open the coffers again to once again start to try to rescue Pemex. And I think that's the initial reaction of the market.
Okay. Okay. Well, yeah, there has been a lot of pushback on people moving to Mexico because it's been driving up prices, knocking out family businesses of generations that they'll tear down the restaurant and build condos. So, there are signs, I think, in certain cities of Mexico that if you're from America and you moved here, go home. So that probably is going to be policy. They're going to make it tougher on expats because
yeah, absolutely.
They wanted to, but now they have the party and they could legislate that desire. Okay. All right. Great explanation.
Yeah, I think that's now it's really a period of I've been positive Mexican peso for years.
Long time. Yeah.
But here and now, I'm not going to stand in front of this train. There could be some.
My goodness, look at what it held down there.
Sorry?
The 200 month. It held the 200 month moving average on the monthly. Look at that. That was a low. It probably doesn't mean anything.
No, because if you look back, I mean, 10, 15 years back, we never even went close to it, right?
Well, I was being facetious. It's probably just a coincidence because technical analysis is a voodoo art. So anyway, I look at this chart and I go, 19's possible, maybe back to this big breakdown here as I look at the monthly. So that's 2 is around a little over 119. Okay, so that's a big play from here.
Yeah, there was a lot to do when we broke below the 18.5.
All right, there you go.
If we go to 18.5, then we're going to have to pay attention to what happens.
And you know what? You haven't even mentioned this yet, you guys. I mean, there's a good chance Donald Trump's going to be president again.
A few times already, yeah.
Oh, did you already talk about that?
Well, not today, but I mean,
yeah. No, I'm just talking about today to add fuel to the to the fire, the peso fire. It might be that too,
Yeah, he's a real good friend of Mexico. Anyway, let's see, Blake,
Yeah.
what do you think of how they turned this S&P in like the last hour at pretty important support, I'd say.
I mean, that was
Look at that candle.
that was ridiculous, and it was end of month, and it was like just flows being pushed through, and it was so illiquid that it was I mean, that's easy to do for the market if it wants to, because no one's going to stand in the way on a Friday afternoon, but knowing that there's a lot of flows. But yeah, I mean, I think I referenced the old TV show here in the United States, Saved by the Bell,
Okay.
on the week ahead video, because it was really, the market was literally saved the last hour from a complete, technical breakdown. So, yeah, I mean,
that's the biggest candle on the chart.
yeah, it was crazy. I mean, I just watched it. I think a lot of us just sat there. Well, I fell asleep, actually. I take that back. I After the fact, because I fell asleep the last hour of the market. I looked and I'm like, oh my God, what did I miss? And yeah, it was a
Does that
crazy move.
negate the evening star on the weekly?
It does, and it did, and it did. It's more of a doji, hanging man, however you want to look at it. So I was really looking at the spiders as being an evening star, but no, it was a false. You can almost view it all as a false breakdown. That's why we'll have to see what the U.S. data brings this week. I mean, bottom line.
Okay. All right.
Hey, I'm gonna. Do you mind if I take the chart? Oh, go ahead.
I'd say Friday's low is pretty important. Look at it. Came right off the 50.
Yes.
Coincidence. So
100%.
If you're bullish, here's your line in the sand. They gave it to you Friday.
100%. 100%.
Hey,
right, real quick, I want to share with you guys something. So we didn't take this into account last week. So I'm going to tell you right now. You guys are listening in. You'll notice that on ForexAnalytix, the sale is gone. Well, the first was actually on Saturday. And so we've got a bunch of requests about like, I missed the pricing, blah, blah, blah. We're going to put the sale back up until the 5th. So the middle of this week. So you guys, well, I'm going to tell you right now, if you wanted a trial for $1 for the ForexAnalytix community this week, and you wanted to be in our chat rooms for non-farm payroll, do it right now. Literally, because in about 30 minutes, this is going to disappear. Maybe 30 minutes to an hour. So our developers are getting back in and reinstalling our sale prices. And then the sale prices are going to be on for the next 3 days. So if you want the really cheap price for ForexAnalytix, the affordable packages, then you get to do them, because we had a couple of requests this weekend because the first was on Saturday. So everybody's like, I'm not going to be able to take advantage of the sale, blah, blah, blah. So anyway, just letting you guys know that. And again, if you want to try it for 10 days and be in our chat room for non-farm payroll, then take advantage of the $1 trial right at this moment in time. You got 10 minutes to do, or about an hour to do it. All right. Dale, let's talk about a few things. So obviously we were just discussing the Mexican peso. Look at the big breakouts. I mean, and just so you know, Dale, I was long both Euromex and Dollar Mex. I closed out on my Dollar Mex 100% of it at 58 this morning, at 1758. I closed it all out this morning. I still have my Euromex, and I am buying dips, just so you all know. Now, I'm with you, K-Man. I think this is a big deal. Her majority in Congress is probably going to freak out a lot of players, and you're probably going to see the dollar Mexican peso trade back up towards between 19 and 20 in not like today, but maybe in the months ahead. So that's kind of what I'm looking at with the dollar mex now. Now, as far as the dollar goes, the dollar in general, the euro obviously is trading between 108 and 109. And I'm going to just say this. I do think that the dollar is about ready to get hit, and it might come, and it might even start as early as today. We have ISM data today. We have ISM manufacturing. I'm looking for an eventual break of 109 and a retest of 110. You know, what the euro does up here, you know, at this resistance is to be seen. I'm not convinced that the euro's ready to break out higher above 110. We do have the ECB this week. Remember, the ECB is expected to cut rates, and so is the Bank of Canada. So that's another central bank, which we're going to have to watch fairly carefully. Matter of fact, Ryan, I want to get your opinion here. We do have Canadian jobs this week, and we can also see the dollar CAD is, you know, hit the one. I got limited out of my dollar CAD this morning at 136.55 when I was sleeping. So I got limited out of this. I was long dollar CAD on Friday, bought some in Asia when we were down here. And if you guys want to, if you're not in the ForexAnalytix community here, just so you guys can see this is the S&P, or this is the trades room, right? If you go in the trades room, you can see this is where I just closed out my dollar Mexican peso for 6,300 pips. The Euro Mex I'm still holding right now, but I also got limited out of all of my dollar Canadian longs last night, and I bought some dollar CAD in Asia, added at 136. I think it was 10 when I got long some more and brought my cost average down. So if you guys want to know what we're doing, not just myself, but other traders too, K-Man's obviously posting stuff that he's in here. Ryan does all the time, you know, and different traders as well. This is what you see inside the ForexAnalytix chat room, just in the trades room. You know, that's not just, and AJ was just talking about the Nifty and what was happening in, you know, in the Indian elections. AJ just said the election poll, the exit polls are showing that Modi's going to win in a landslide. Look at the Nifty. We're up 3% right now and breaking out to all-time highs. So these are things that we discuss, not just currencies, but there's a lot of different topics that we're talking about in the ForexAnalytix chat
How's the
room.
Nikkei look, Blake?
It still is bear flagging, but you know, it's here. Let's pull it up.
Because it's the only one not making new highs.
No, it's not. And I still think it looks like a bear flag. Where is my Nikkei?
I think you.
I just passed it. It looks like a bear flag, but you know, it might be more of a triangle pattern. I don't know. I mean, I'm staying bearish while we're below the 618 retracement.
It's a weak sister, so you know
it definitely is. Yeah.
Yeah. Okay. And that's a big switch from last year, because it was a star. It was a meteor.
Yes, absolutely. So, yeah, it really is. All right. So, what else did I wanted to? Oh, I wanted to go back to Ryan. Ryan. So
Saloom just signed up, Blake.
Awesome. Saloom. Then we'll see you in the chat room. Make sure you say hello. Now, what I would say is when you get to the chat rooms right here, by the way, when you're logged into the platform, see this little button right here. It's next to your name. It says go to chat room. Go in there, say hello.
Blake.
Huh?
Those things, the icons look just like Blake and came in. So you click on that.
Yeah, right. Exactly. That's exactly what it looked like. Make sure you go in the general chat room and say hello.
On Monday morning, you do.
Hey, Ryan, what do you say about the Bank of Canada this week? I mean, this is going to be a big one because this is like one of those up in the air. I mean, they're supposed to cut, but do you think they're going to cut? Do you think it's going to be a hawkish cut?
Yeah, well, that was a bit of a shock when I saw the expectations this morning, and I didn't realise our market's expecting them to cut 25 pips. It seemed like we've gone from 0 to 60 in 5 minutes or 30 seconds, because we had the CPI data that came in soft a week or so ago, but it's really ramped up these expectations. I'm wondering if they're going a bit too far. I'm a bit more 50-50 over whether they cut rates this week. It wouldn't surprise me if they didn't, but touted, you know, the following meeting or sometime soon after. But I'm just wondering if the market's maybe getting a little bit too excited about a cut.
Yeah, and you can see if they don't, the dollar max is very vulnerable now. I mean, look how vulnerable it is. We break. Or I'm sorry, I don't know what I said.
You've got
Yeah,
mix
the
on the
dollar.
play, mate.
If it breaks 136, specifically I would say 135.90, just to be, if you want to be granular with me, right there. If we break that, you're going to see a big meltdown in the dollar max. And I do want to buy it on a dip, not this week necessarily, but I explained this during the week ahead video. We break this level, I'm all about buying the dollar max down here near 134. I think that's going to be the level to be buying. But we have to get past this week though, right? And look at it melt down right now. It's crazy. The dollar max. It is absolutely just coming unglued after having a nice squeeze in Europe.
Got something with the mix today, Blake. You're talking about Canadian.
What?
Yeah, it's dollar CAD, but you keep on saying dollar mix.
Oh no, it's also 5 a.m. and yeah, I just keep saying dollar max. I meant dollar CAD, but the dollar CAD is melting down here. Sorry. Thank you. Well, since you're talking, K-Man, what are your thoughts about the Bank of Canada this morning?
Well, I think there's a fair chance they do cut, but as I said, I mean it's going to be on a cautious note because there could be a bit divergence between McClem and Rogers there. So I think Rogers is going to try and push back against McClem trying to be too dovish. So it's going to be it's still like 51-49 or so chance, even though the market is pricing between brackets something. But yeah, it's going to be a very tight decision, but I think they do, based on the latest data. Personally, I think they do, and that's it. But it doesn't mean that dollar CAD is today is going to fly. It could only have to wait. It could have to wait until the decision actually, because we are having US data, and I really think US data are going to be more directing the affairs the first 2.5 days of this month. So.
Yeah, and remember
Yeah.
the ISM manufacturing PMIs. It just so everybody is clear on ISM, it has been printing below on manufacturing. It's been printing below 50, and for like the last 2 months, I want to say. But so that's got to have some the attention of some economists right now, and any continued weak contractionary numbers out of the ISM data is could continue to weigh on the dollar. Speaking of which, I want to also point this out really fast, and then I'm going to ask you guys what you're looking at this week, if there's anything else that you guys are seeing. The Aussie, it's getting really close to breaking out, guys. I think it looks very vulnerable to a rally here. Just so you guys, if you guys didn't see it, the Chinese manufacturing CACs and the private data PMIs came in a little bit hotter than expected. So it looks like China's economy is stabilizing a little bit. I don't know about the Australia-China relations. If those improve, maybe that's another catalyst to continue a rally here. But the Aussie looks vulnerable. The sterling, I mean, this one looks like what do you make of that, Ryan? I mean, what's up with the sterling? I mean, you guys are going to get new leadership and new prime minister, and the pound's going to rally. What's going on there?
Nothing, mate. Just a bit of ranging. This is cable. It's not going anywhere.
You don't think it's going to break out?
What? Which way? Down or up?
To the upside. It looks like and maybe it's a dollar move, not so much a sterling move.
Yeah, holding 127. Although we had a bit of a blip, didn't we, last week? Holding 127 is really key here to keep this momentum going. But we've had a couple of dips under, 126, 75, 80, that sort of area. So it's holding this rally that we've had since late April and keeps it in the balance. But I think, yeah, this is going to be governed by the dollar this week more than what happens in the UK. No one gives a monkeys about the election at the moment. So
got it. All right. Well, hey, I know, Dale, you're going to be bringing in Peter. He just came over. I'm not going to bleed into his time because he's always a great person.
But all right, Peter's one thing, but I have to ask you this. What about my haircut? My haircut.
Oh, look at that haircut. I love it.
Oh, okay. Now I went in And she said, Dale, can I just use the clippers on you? Because I always, I go, why? Because it'll save you time and it's easier. And she said, yes. I said, okay. And then she starts with the clippers and has me turned around the other way. And then she flips me around and I went, wow, that is really short. And so anyway,
So,
she said it'll
Pete,
grow back in 2 weeks. She said,
I've been waiting 20 years for mine to grow back, Dale. Don't believe
really?
those
Okay, well,
proxies.
you have the patience of Job. So anyway,
and wait, let's
yeah,
ask Peter. Peter, are you gonna follow Dale here? And
just
look, it's
talking.
only gonna take you 2 years, or I mean 2 weeks to grow that back. That's it.
Yeah,
2 weeks. 2 weeks.
Peter and I are opposites when it comes to hair. But anyway, she says, "Why don't you wear that your hair that short?" I said, "Yeah, not since I was 8 years old." Anyway, so
Dale,
that's it.
it shaved at least 15 years off you. You look great.
Oh, I only look 80 now. All right, all right. So look, I think it's a real important time to have our guests here today, and Peter, I love talking to you. All right, I'm
Great.
not going around the bush, and so welcome back to F.A.C.E, buddy.
Thank you very, very much. Yeah, thanks. Thanks. Yeah, I'm not sure about Blake's comment about cutting the
On
hair
your
and
hair.
looking younger. I think
Yeah.
if it's going to make me younger, I'm going to shave everything off.
There you go, Peter.
Yeah.
Now we're talking.
So you want to look like Ryan. Okay. Anyway, Brian doesn't shave the rest of it off, do you, Ryan?
Yeah, yeah.
Oh, you do?
It all
Okay.
goes
Well,
every
you were
Saturday.
fortunate when you were born because it became the style. You know what I mean? Anyway, enough about hair. Let's talk about not letting hair grow on her account. And Peter, I want to start with this, and it'll lead to another discussion, but you have a Dow chart that shows a double top at 40,000. The Dow chart, it was kind of historical. I think you shot it to me over Skype.
Let's have a
And
look. Yeah, I think we've got a long-term Dow chart. Can you see my
yeah,
screen okay, by the
yeah,
way?
got it.
Yeah.
And
Okay.
and okay, so here's my
How about
question.
that one? Yeah.
That wasn't it, but it did show, well, maybe that was it. It showed a double top at 40,000. Okay, so that's not the chart that you
Not that one.
this is more it's what you shot to me on Skype. So I guess you didn't publish it, you just showed it to me. But the point was, when did you first come up with that 40,000 target? It was quite some time ago.
Yeah, I think so. Yeah, actually, it was because I think I remember now. Yes, it was because there was headline news a couple of weeks back, wasn't there?
Yeah, people were
That
putting their 40,000 cap on.
That's it. Yeah, I mean they were talking about 40,000 because we just got there on an overnight close on the index. I think the futures had already been trading above, but everybody's looking at the cash, so I think that was it. And I sent it to you because I actually had to go back through our research to find out how long ago it was, and I think it was the back end of 2015, I think it was, and I think it was going back to sort of somewhere around here,
Okay.
around where I'm pointing to now, and
Yeah.
and it became sort of obvious when we were looking through and doing comparisons and everything that 40,000 Dow was going to come in. I think I now know which long-term chart this was because I think it was probably something like this one. Yeah, the very long-term.
Okay.
This is going back to 19.
It showed the double top, but anyway, so you had 40,000, and your comment was amazing how time flies. That was, I don't know, 13 years ago you did that. So that leads me to, before we talk about forecasts, another question that I'm sure you go through, I go through. Have you ever noticed that your original ideas are the best? And then, because we're close to the markets and watching the progression of things, that will sway away from our original idea, which turned out to be correct because we might be looking for one more high or one more low and trying to be perfect.
Mm-hmm.
That happen to you?
Yeah. Oh, absolutely. It does. Yeah. I mean, I think that, yeah, we try to be adaptive, don't we? When we're sort of following a current existing forecast, and then the years or months tick by, and gradually you start to think, well, okay, that pattern suggests a little bit higher, or maybe we won't get that high, and we adjust and do things. And then later, you find yourself going back to the original, more intuitive forecast that you made some time ago. And that's often the case, very much. I find that, yeah. And sometimes it's just best to leave alone. I mean, obviously, the thing that happens with Elliott wave is that you're continually adapting to more information as the pattern builds,
Right.
and invariably, it's best to, if you're trading, of course, it's really best to just leave things alone, because one of the temptations with trading is that you either jump out of your original trade too early, and rather than just letting it run. And that comes down to doing more trading. I think when you're trading more, and being a bit more of a trader rather than the analyst, or combining the two, you tend to find that through the experiential point of the trading aspect, that you tend to rely on those original forecasts a lot more than perhaps you might have done without the trading element input.
Right.
Because
Exactly.
with the trading element, you're training yourself at the same time to hold a position through its to fruition, and that's an important aspect of any sort of trading, to be consistent with making profits. Because if you don't hold on to those winning trades when they come, you may end up either underperforming or actually end up net losing, because you've got to allow those big runs to occur when you get the right positioning on board in the first place. So it does encourage you in a way through that process to hold on to what you did originally.
Okay, so important. That's an issue with me. I bought the bottom in miners March 1st and didn't sit long enough. So that's a great idea to write down what your, a few different targets and what your long-term target would be on that, and at least keep something until that target is achieved, unless, you're stopped out in the meantime, instead of just taking it because it's overdone.
Yeah.
And it was a good trade. You always think you could re-enter, and then you turn your head, and then all the windfall profits happen without you.
Yeah.
Okay, so looking at this Dow chart, so it looks like you think that double top could be taken out in the Dow before it turns south over 40.
Yeah, I mean, well, these two tops here.
Yeah, that's 40.
Yeah, okay, yeah. Well, I'm thinking that actually in the very short term, probably not for the Dow. It seems to be underperforming. If you take a look at the shorter term positioning, this was published in our report from last Friday, but basically it shows that we've actually hit a top in April, early April, on the Dow already. So we've got a bit of relative underperformance in the Dow relative to to the S&P, and the S&P and the Nasdaq should make new highs.
Without the Dow.
Without the Dow, yeah. I think keep a lookout for that, because we're already seeing a top effectively in early April, and this movement down into the mid-April low was a 5-wave sequence. It could have been that it may have been that subminuet wave 4, which you see here on the daily chart here. We could have shifted that across to make this an expanding or running flat, and then you could make a higher high. But look at the way last week it sort of developed downwards into an impulse wave.
That was a 5.
We've almost gone back to the mid-April low, which again is another confirmation of underperformance. And I think it's going to be a struggle for the Dow then to make this high. But of course, it can do a deep second wave retracement again. You can come way up here, and that wouldn't be a problem. But what it does do probably is it sort of gives some sort of suggestion that the movements to higher highs in the S&P and Nasdaq are going to be modest higher highs. They're not going to be, huge higher highs, simply because of the Dow's underperformance. So, you've got to be very alert to this, and this is going to bring the next setup. But that's one of the things which I think is going to really sort of help us to time the exact top in the S&P, which looks a bit like this one. where we've got a target that's getting up towards the 55 and handle, somewhere up there.
Okay. Maybe around the solstice, June 21st or early July.
Well, yeah,
time.
those are sort of a very big calendar dates for GAN, isn't it?
Yeah, the
GAN's
solstice.
analysis. Yeah.
Or Trump sentencing on July 11th before the convention. So, a lot of people think all markets top and bottom together. And right now it looks like that, but there are some exceptions. And I believe you think Nikkei has already peaked.
The Japanese market, yeah.
Yeah.
Well, that's a jump. Okay, yeah. Japan, yeah, it looks a bit stretched. Although in the report on Friday, I did mention it might take out these two residual highs. There's one here only because we've dropped down in 3 waves into last week's lows. You see here.
Yeah.
It might, if it takes out this secondary high, 39,999, then it's going to probably take out the high here and get up to some original numbers that we had at 41,884. But the bigger picture you see is a very big double zigzag from the pandemic low.
Yeah.
This is clearly a double zigzag, mainly because we can also see a triangle down here, which gives it away a little bit because triangles don't occur in second waves, as you probably know from an Elliot practitioner yourself, and of course that sort of means that it's not a second wave, it's a B wave of a zigzag, and we've got an elongated C here, which is the C wave of the secondary zigzag. So we're getting into sort of the right numbers where this can collapse down. But of course that's quite interesting because since Warren Buffett announced that he was getting involved last year in a more significant way, a lot of fund managers have jumped on board. But generally speaking, I think the Nikkei is not too dissimilar to some of the correlations that we're looking at in dollar yen and also 10-year Treasury yields. Because if you go to look at the correlation between, so look at 10-year Treasury yields and dollar yen, one of the things that's very noticeable is that from last December's low, so when the 10-year yield was here, 378 moving up. This is actually a double zigzag pattern that ended in April. And for dollar yen, this was a single zigzag, but they pretty much timed together. So we're looking at a composite sort of comparable decline for both now.
Okay.
And that should also pull the Nikkei eventually down, but it might just be delayed a little bit. You mentioned dual, comparable highs, simultaneous highs, but that wasn't the case when you go back to look at the indices in 2021-22. So, for example, the S&P topped out in January 22 here, but the NASDAQ was obviously November 21.
Earlier.
Slightly earlier here. And if you look through several indices, you'll find that, it's split about 50-50. Half of the major indices topped out in November 21, and the other half topped out in January 22. And of course, this also goes through to the relative performance, which is something which, I've talked about a lot in the last 12 months, because we've got some indices which are breaking above the old November 21, January 22 highs, like the S&P and NASDAQ here. So we're broken slightly above. But for a lot of other major indices, we haven't. And it really comes down to sort of breadth and looking at things like the Russell. This is the Russell 2000 small cap. And you can see we're still a long way from breaking the old November 21 high here.
Yeah.
Up here. And if you go through to look at some of the others like the mid-cap indices and some of the sectors, we look at some sectors here, you'll see that the top is consumer staples sector, XLP. So we're still below the old highs here. This one is April 22. So there's no, that's one of the exceptions to the rule, really. This one is November 21. This one is XLY, which is consumer discretionary.
Yeah.
Yeah. And this one is Prolog. This is the real estate investment trust, PLD, logistic. That one was April 22 as well. That was well down. Well, you know what's going on in the commercial real estate sector. It's
They're
broken,
like,
basically.
analogous to ghost cities in China.
Right, absolutely, yeah. This one is pretty much broken. So yeah, a lot of these indices are well below the highs. And if you also take a look at something which I update fairly regularly in our reports at the moment, is something that not everybody's so familiar with, and that's the NASDAQ Next Generation Index. This one is it's the top 100 shares below the NASDAQ 100.
Okay.
So it's technology indices and stuff like that, but below the NASDAQ 100 listing. It's the sort of second division tier, which is a bit like looking at a mid cap or a small cap. And here we are, well below the old November 21 highs. So you see, this is very interesting now, because if you've got a lot of indices which have broken the highs, but in three-wave patterns, and you've got some which are still below those previous highs of November 21, Jan 22, these are only because you've got two different corrective patterns. Now, a lot of them are zigzags like this, zigzag A, B, C. So this corrective rally is a zigzag. If you take a look at something like the value line, which has a much broader perspective,
or equal weighted S&P,
or maybe an equal weighted, which I actually have got somewhere. But this is the value line. You've got a zigzag still. Okay, it's all coming from the October 22 lows. A, expanding flat, really nice expanding flat for B. 5 ways down subdivision in the C wave there, and then you get the 5-wave pattern up for wave C. So this one actually breaks a high. Okay, so this zigzag is an outperformer. It's broken the previous high, but it's only a nudge. It's only a Fibonacci 14.6% increase above wave A. So it's not really much. But this qualifies as a zigzag here. This pattern qualifies as 100% equality in waves A and C. And it proves to be the wave B of a larger expanding flat. The larger expanding flat is basically this one here. So we've had a zigzag rally in the value line, the Dow Jones Industrial Average, and so many other different things.
Isn't the S&P, I've seen some Ellioticians label this as an expanding flat, this rally from several hundred handles lower, and are still looking at it as an expanding flat. Is, in your eye,
yeah,
an
I've got the
flat?
Yeah, I think that the lows in 2022, you've either got lows in June 22 or October 22. Again, you haven't got exact timing correlation. For example, the Russell 2000 bottomed in June 22 and then did an expanding flat for the Russell. Well, let's have a look at that to start with. So we'll go back to that one, have a quick look. Here it is. So here's the 2022 decline. Here is June 22, and this is the expanding flat. A, B makes a slightly lower low, and then you have 5 ways up for C, makes a slightly higher high. So we qualify that as an expanding flat. Well, that expanding flat is duplicated in the S&P and the NASDAQ, except that you've got much bigger amplitude because they've outperformed. Right. So wave A comes up a bit higher, you get an elaborate B, and then C goes up. So here we are looking at, let's go to the NASDAQ for that one. So we have 3 waves down for wave A, and then the expanding flat is like this, A, B, and this enormous C wave. Now that C wave, that 5-wave pattern, it actually is an Elliot 9-wave sequence. 1, 2, 3, 4, 5, 6, 7, 8, 9 has a subdivision of 5 waves in the 3rd wave. Now, the interesting thing about this is that 5-wave advance for some big equity markets, like if you go to, I think, well, certainly NVIDIA is a good example.
Yeah.
But I think you could probably look at Apple or Amazon. They all bottomed in their fourth waves in October 22. And that 5-wave pattern in those big Mag 7 equities, that's all the first wave of a bigger fifth.
Okay.
You know,
All right.
that's where we get the pattern correlation working exactly. So some of these big Mag 7 equities are moving up from the same date of October 22, but their 5-wave patterns are coming to completion right now and are ready to roll over to the downside in the months ahead, as perhaps a second wave correction. But this one is going to be a C wave decline here for an expanding flat. So A down, expanding flat for B and C. And that's where we come to sort of this idea of the expanding flat, but the B wave, rather than a generic zigzag like in the Dow, you've got this expanding flat here, this one.
Yeah, or an irregular.
It's an irregular. Yeah, in the old days we used to call them irregular flats, didn't we?
Okay.
Yeah.
All right. Well, eat prunes, flat. So Peter, anyway, Peter, we have this scenario where like TLT and the bonds really held an important area and turned up, really kind of like a graveyard save at important support. Like TLT went to 61.8 and a wedge line, and the 10-year retraced 78.6 and started heading lower. So you're looking for lower yields. Could this be both, at least in initial stages, lower yields and a lower dollar jet fuel for this final stage melt up?
Yeah, I think I mean, one of the things that was troubling me earlier this year was that we knew at some stage that Treasury yields were not giving a complicit sort of major decline. And of course all of the surveys that we saw in December last year showed that all the surveys were showing that I think something like 60, no, it was even up into the 80% area were expecting 150 basis point cuts by the Treasury this year, by the Federal Reserve rather, and that was an historic peak of optimism. And whenever we'd seen that before, it was like 2 standard deviations over the previous ones, which the last one, of course, was the financial crisis period where people expected major cuts in interest rates. And in fact, the 10-year Treasury yield did 100 basis points to the upside. Well, this one, as you can see, went up from 378 to 473, and almost 100 basis points as well.
Right.
But it did so in a double zigzag, a price swing sequence, and it topped out in April, timed it out with the exact top that we saw in dollar yen when Bank of Japan were rumored to have stepped in for the first time. And then, of course, since then, we've seen 5 waves down, a nice 5-wave drop. You can see that here in my worksheets, actually. Nice 5-wave development down since then, and a nice 3-wave push up last week. And you can see now the yield is trying to hurriedly sort of pull down because it's starting this drop down to 358. Well, I have to admit that I've been watching the bund yields here in Europe as well now, and this extra push up last week actually caused a break above the April high in the bund yields.
Interesting.
And that meant it was, in relative speak, sort of underperforming, and that more or less, let me find it here. I think that more or less confirmed. Here it is. Here's the April high in the bund yields, and we took that out slightly. It created a slightly different pattern, whereas before it was only 3 waves up from 222 to the April high. It's created an extra sequence, created 5 waves up as a diagonal. And if that's a diagonal, then we're moving up into a zigzag from December's low, from the same low that Treasury yield started their 100 basis point push up. And this is now turning downwards. And that means that in all probability, this can trade down to sort of something like 120 over the next several months into year end, early next year. That's a huge move.
Boy, does that fly in the face ECB meeting this week. Everyone looking for a hike. Almost makes me think that
they're looking for a drop, actually. Yeah.
A cut.
25
that's
basis
right, a
point
cut.
Yeah,
That's right.
Yeah.
So it almost looks like the market is starting to price that in.
So the big question then is 358 enough, or is that not enough? You know, is that?
Yeah.
I still think that with the zigzag upswing for dollar yen, that dollar yen is also involved in a diagonal like this, and if that's the correct, here's the zigzag upswing for dollar yen. If that's correct, then this will drop quite severely down to 144 3/4 before it goes up again, which does dovetail in with this idea of the diagonal still. But I'm not certain about that. The only thing I can tell you is that all of the clients that we're speaking to, institutional clients, that is, all the banks, tier 1, tier 2s, also some of the fund management in pension funds, we're telling them of this decline coming, and they are now positioned for this decline. And if it's so
buying duration, are they buying duration?
Well, they're buying a little bit of duration, but actually they prefer to buy the short end, actually.
Okay.
But
because it's only a trade, it's because higher yields to come after this decline in yields. So let me ask you this. I see 358. I know the calendar isn't exact, but it looks like that's going to happen in July.
Well, I think we could probably push this out to sort of October time, but I don't know. I don't know the timing of this. It could be very quick. I'm not sure. I tell you what I am watching, and anybody watching today and listening in, I'm just watching how I think we've got some JOLTS numbers this week, haven't we? Sometime, is it tomorrow?
I'm not sure. I know we have NFP.
I think the JOLTS. I think the job openings comes through tomorrow. And we've got a sort of an ADP report as well coming up before Friday's non-farm. But keep a lookout also just for the weekly employment report. I've got a funny feeling that if we're going to see a downturn in equities soon, and we're talking about a final push up for the S&P and Nasdaq first, but before that turns around and heads down, I would think that pretty soon, sooner or later, we're going to see that weekly jobs numbers. They're going to start moving up quite strongly. Now they've been around 182.20. But I think that keep a lookout for a sudden jump where it goes up to 280 to 300. Keep a lookout for that, because I think that will be the first indication of where the market suddenly melts to the downside.
Okay.
Yeah.
All right. So bad news is good news is bad news for the market.
Depends what your positioning is.
Because otherwise, if we made the highs in yields for 2 in the 10-year, and we get a jobs number like that, I don't know about 358 before 463. So you're saying that the market still thinks good news is bad news, but at times good news has been good news too. So anyway,
well, that's certainly been the case in stocks, isn't it? I mean, everything you throw at the stock market, that could be negative has been brushed aside, which is a bit of a hedonistic sort of indicator itself. I mean, unfortunately, we don't actually have a Geiger counter that could be converted into sentiment that sensitive enough to tell us exactly when the top's coming. But it's close,
Okay, so do you cover the peso?
Mexican peso, yeah.
All right, so we had an election here, and it was basing out. I'm wondering what your long-term count is on this, if this is just a bounce in a bear market, USDMX, or we've staged, we put in an important bottom.
Let's have a quick look. Got a lot of currencies, and I'm obviously, whoops, sorry. Let me just try and see if I can find it.
Do you like wheat now? I see you're following commodities. Does the wheat look good to you?
I haven't really followed wheat really intricately, to be honest.
All right, there's the peso.
Well, this is the peso. I mean, the thing is that look at the date where it topped out. Look at the date. This is April 20. This is the pandemic high, right?
Right.
And it's been trending down since. So it's been a huge outperforming currency.
Yeah.
Really huge outperforming.
So this election bounce doesn't mean much to you. There's still much.
Well, this is a weekly chart. I mean, it's basically telling us that the bigger picture is very much to the downside. The dollars, when you look at the Mexican peso, this is very long term. This is the short-term picture on the daily.
Okay.
It might be that we've actually got an expanding flat there, but overall the trend is down. But the dollar is weaker against pretty much every global currency. I think the only thing that it's not been really massively weaker against is the Indian rupee, but even that's about to turn around, I think, and strengthen. And we've got a basic proprietary Asian dollar index. JP Morgan used to update one, but they stopped it. We've created a model ourselves since that sort of stopped, and the Asian dollar index looks a bit like this on a longer term perspective.
Oh.
It's just building up because it's doing a calculation model with about 10 Asian currencies, and so
By
it's just
Asia.
basically, yeah. I mean, but this is again another example of US dollar weakness coming. It's nothing to do with Asian currency strength per se, or even G10 dollar pair currency strength. We're not talking about individual currency strength here. It's basically dollar weakness, and I'm really amazed to see it. But there's a lot of investors out there still dollar long.
Yeah, it's a crowded trade on the long side, isn't it?
That's certainly the case with the commitment of traders reports. Yeah, if you look at those, and I mean, it's not an extreme dollar positioning historically, but it's still relatively pretty high. It certainly makes, if you look at sort of Bank of America's latest surveys, the dollar is in the top 10 of all asset classes, or individual contracts. It's in the top 10. Obviously, the big one that's is basically tech. That's 60 odd percent or something. Yeah, the most crowded trade. Ironically, in the top 10 is short China. Fund managers are very short China, but dollar is very long in that top 10. I think it's in the top 5 anyway. But you see, the problem you've got with the dollar is that this is a major high going back to sort of October 22. You've had 5 waves down, a really tight second wave
2 years
correction.
of sideways, almost 2 years. Kind of
Well,
like the Canadian dollar. The USDCAD has a 1.5-year distribution pattern to me. Hasn't gone anywhere for a year and a half.
Yeah, I mean, this is the Canadian dollar, and you can see, it's bumped along. It's just gone nowhere. But all of these currencies are getting ready for something special to the downside, really something special. And it's about dollar weakness, really, US dollar weakness. It's nothing to do with anything else about currency strength. So the question is, what's going to basically collapse? What is really going to collapse the dollar down? What is that going to do?
The political system, the election, confidence crisis, constitutional crisis. Could it come from politics rather than financials?
Well, it could. I mean, we are in an election year, but it's not until November. It's a long time to wait. Stock market should turn down before then.
Well, I'm talking about the dollar, lack of confidence in the dollar. And you're looking for down, which is going to have a lot of people off sides. Then I want you to go to your website, because people are used to the dollar rallying if we get a decline in stock. You get some safe haven buying. You're putting out the narrative that the dollar will weaken as the dollar weakens. Can you explain that to people? Capital flows?
Well, I think that there's a big discussion about capital flows because we've seen that central banks around the world have been steadily declining their dollar holdings over the last decade. And that's starting to accelerate a little bit because don't forget that we've got a big problem with NATO versus Russia at the moment. And the BRIC countries are fast increasing their memberships. And as part of that membership, they're encouraging to de-dollarization going on. And at some stage, there must be a trigger point to that. And it's difficult to know exactly the timing of something like that because it's a very big macro discussion. But and we don't know. But if things come to a point, I mean, Russia is getting very, very aggressive because of NATO's intrusion into Ukraine and the latest funding proposals that have been ticked off. And the Russians are basically saying, hey, you guys, NATO said and gave promises over 10 years ago that it wouldn't start putting armaments into Ukraine and start infringing the old Soviet borderlines. And NATO has basically infringed upon that. Now, if Russia starts to increase its incursions and NATO starts pushing back, we've got a big problem. We've got a big problem. Now, normally that would be safe haven dollar, but we're just not seeing it graphically represented. The only thing is that we've been taking a look at the other two currencies, which are safe havens, which is basically Swiss franc and the yen, don't forget. Well, what's happened to the yen recently? Well, it's, could the yen start staging a big recovery revival? I think it probably could. But we've actually got a Swiss franc yen chart here, just to take a look. And let's have a look at it here. Swiss franc yen. This one is getting very top heavy. Very top heavy. I'm not sure that that's going to necessarily mean that Swiss franc is going to push up a lot further anymore here. Yeah. That dollar yen, that sort of Swiss franc yen chart is going to start turning down pretty soon. Okay. Very, very top heavy indeed. So that brings an interesting discussion. It's worth following those. What are going to be the main outperforming currencies going forward? And I think if you take a look at something like Euro yen on the crosses, I think we've got every reason to think that that has topped out already. And if I can find it, Euro yen, and that's going to start turning down here. Okay. That's very, very top heavy. So there's an interesting discussion about that. But really, yes, I do understand the logic behind US dollar being a safe haven and all of that. But
it's not happening this time.
No, it's not going to happen. It's not going to happen. I mean, if it was, we would be getting alerts saying on some of the crosses or at least some of the G10 pairs that it wouldn't happen. But it's consistent right the way through every single currency that we look at. Yeah.
All right. Well, Peter, a lot of people are asking questions on different markets, but we've already gone 7 overtimes. So
sorry about that.
So no, I'm not sorry. I want to thank you for edifying everybody today and some very interesting looking charts we've covered here today. So if people want to know your view on some of these markets they've requested, how do they get it?
Well, thanks. Yeah. If you're curious, pop in and have a look at us. Do so. We've got a few reports which you can subscribe to. I think one of the popular retail reports that we have is the Elliot Wave Compass report. So if you go into, this is wavetrack.com. This is our homepage up here. Sorry about that. And then we've got subscription and the Elliot Wave Compass report. So it's $39 a month. We publish 2 reports a week. And if you do subscribe and go through the registration, let me just show it to you. So show you what it looks like. The Elliot Wave Compass report, you log in and look like this. You go to the report. And these are all the updates. If you click on the first one, for example, you can just actually then scroll through.
Yeah. And you also have some text describing the different sectors.
Yeah, there is. And the report itself, well, anyway, that's one way to look at it. There are some other reports. If you're interested in looking at stock indices, you can go through and look at all of these major indices on a longer term basis. And actually, we're working on currently at the moment our mid-year reports. And the first one of those is stock indices. And when we publish this in the new year, we normally publish these on our blog, which is on the first page. You can go into our blog, and we publish exactly these.
Oh, there's a chart. I go underneath the picture of those guys.
Ah, there we are. Yeah. Here we go. Yeah, outlook for forecast. That was the old 2016 forecast.
So you called 40,000 Dow in 2016.
That's right. I think it was.
Okay, not bad.
I think it was
Nostra, good.
17,000 at the time. Yeah.
Yeah, nice call, Nostra. Good.
Yeah, thanks. And so yeah, we're going to be able to publish those when they're coming up for release pretty soon. This was the that's some of the supplemental stuff. But anyway, we're going to be publishing those, and that's going to show you exactly where we are and what the upcoming declines look like for the major stock indices. And later next month, we'll be publishing commodities and then going on to part 3, which is currencies and interest rates. So stay tuned for those, because there's a lot of information coming through. And we'd be happy, certainly, if you could start subscribing to Elliott Wave Compass. You're already going to see a lot of information in there. And here's the descriptive text, and you can actually download the report here. And well, that's not working at the moment for some reason. I'll check that out later. But otherwise, yeah, okay. Please do. It's a great and very popular sort of subscription.
Okay. Peter Goodburn, everybody.
Thanks very much.
Yeah, go to Wave Track, Elliott Wave _ WTI. That's his X handle, and Peter doesn't tweet a lot, so what's that subscription? $39 a month. Peter.
Thanks, everybody. Thanks, Dale. It's been great to talk to you, as always.
All right. My trading warrior brother, Peter Goodburn. You could join the team in 4 minutes on the Morning Edge. And don't just count your waves, count your blessings. Thank you, everyone. Thanks again, Peter.
Well done. Thanks, thanks too. Goodbye.